Hi, it's Jerimiah Taylor with Keller Realty here in San Diego, California. And today I want to talk to you a little bit about the real estate market. I've got the numbers up from February 2018, and I want to review them with you and see what we can learn about where the market's at and what we think it's going to do here coming into the summer months. Let's dig in. First up, let's look at new listings. So for the month of February, we had 3,599 new pieces of real estate hit the market. It's about a 1/10 of 1% change from this same month last year. Year to date, we're up about 1% in inventory. There's really no story to be told there, other than we don't have that much new property coming to market. It's about the same as it was last year. Jumping down to closed sales, you'll see we closed 2,044 homes in the month of February. That's down from 2,261 the year before. That's a 10% decrease. What we know is inventory is consequentially lower this year than it was last year. In fact, if we go down here to the number of homes for sale, we only ended the month with 4,612 homes on the market, down from 5,149 the year before, and roughly 12% lower in month supply of inventory. The story that tells us, well, heck, if there's 12% less inventory, we're probably going to see at least 10 to 12% fewer sales. What that means for the average San Diego homebuyer and home seller: low inventory means prices are going up. Now, in the last few days and weeks, we've seen interest rates start to climb. And with the threat of a potential trade war, that may continue to climb. Now, we could also see that slows some of the markets down and we see rates soften. Only time will tell. What we know is that we are back above peak pricing in most markets. And year over year, we've seen about an 8% increase in the median sales price of a home in San Diego County. Now, jumping up here, what you can see is the average attached or condos, townhomes, those are selling between 4 and 490, depending on whether you look at the median or the average. And then our average and median for detached is 600 and 775. Those are some really healthy numbers for San Diego County. And it really begs the question of what's next for affordability. Well, what we know is that even though rates have gone up, prices have gone up, that we're actually still holding pretty strong in the low 20% range on affordability. Historically, the shifts happen due to affordability in the high teens range. So that tells us with wage growth and job growth that we actually could still have some room to run. So if I'm a buyer and I'm looking at this, I want to lock in my interest rate. The time to buy really was about 6 months ago, not because of prices, but because rates were so much lower. So if you can get that rate locked in today, anything below 5% really is a great rate. Now, if I'm a seller, I'm looking at this, and I want to be really careful not to try and play that game called timing the market, because we don't know how much longer this is going to last. For the foreseeable future, it looks like it's going to continue to go. But we all have to live somewhere. So it could be a great time to be a seller in San Diego because you're going to be in control of the market. So there it is. That's the real estate update for the month of San Diego. It's Jeremiah Taylor with Keller Williams here in Carmel Valley.